First, let's examine the perils of market timing. A market timer, also known as a forecaster, says get in because the market's going up, or get out because the market is going down. Well, how do you know what the markets of the nation or the world are going to do? The only market timer forecaster who would be interviewed is Mr. Harry Dent. In 2004, I interviewed Mr. Dent. He had just released the book, The Next Great Bubble Boom. On page 6, he predicted the Dow Jones could reach as high as 35,000 to 40,000 by late 2008 or in 2009. In this 2004 interview, I asked how he could see the future so clearly.
Well, you know, the difference is we do use a science called demographics. We know when the average family earns the most money, spends the most money, is the most productive, when they borrow, when they save, even when they eat potato chips or buy motorcycles in midlife crises. So we look at the economy different. We look at it more like a life insurance actuary. They don't see the future as unpredictable. They know the average person's going to die at age 77.6.
I told Mr. Dent we had been interviewing leading academics, including the brilliant 1990 Nobel laureate in economics, and he would never agree with Mr. Dent. Dr. Harry Markowitz received the Nobel for his groundbreaking research on modern portfolio theory. Dr. Markowitz says prediction is a guess, not a science.
If anybody tells you they know with any kind of precision which way the market will move, run, do not walk in the other direction.
So Dr. Markowitz is polar opposite, and Mr. Dent seemed to consider academic data out of date, Nobel laureates out of touch.
I hate to say it, but that's kind of like having a discussion hundreds and hundreds of years ago trying to tell somebody the world's round when everybody thinks it's flat. People just discount it. They say, oh, that's too simple. Yes, people will say demographics, I can see it being a factor. Our research shows it's the factor because even innovation comes from new generations, and the innovations turn into technologies that are adopted by those new generations. So even technology and innovation and productivity come from these generation cycles. So we see it as the factor, and it's very hard to convince traditional economists of that.
Dr. Markowitz was born in 1927, well after the debate was settled about the world being flat, and his list of accomplishments and intellectual achievements on behalf of investors are not diminished by time. His academic response is, cycles, technology, and innovation are factored by world markets, but not with predictable, precise results.
We don't get rid of uncertainty. We don't predict the market. We just ask, what combinations of asset classes or securities will give you a portfolio which has least volatility for a given expected return, but that won't eliminate its volatility.
As I interviewed Mr. Dent in October 2004, the Dow Jones Industrial Average was 9,757. It was his bullish prediction that in the upcoming years, as far as the market was concerned, the sky was the limit.
We are predicting that 2005 will be another strong year for the markets. If by the second half of 2005, we don't see a strong market advance, in fact, if we don't see the Dow approaching or at new highs, we're going to question and say, well, gosh, have we missed something?
So in 2005, did the Dow Jones approach new highs? January 2005, it started at 10,729. And December 31st ended at 10,717. But Mr. Dent had this scenario covered too. He had hedged on his prediction.
In fact, if we don't see the Dow approaching or at new highs, we're going to question and say, well, gosh, have we missed something? Is there a bigger factor? Is this terrorism or geopolitical thing? Or is the valuation thing so strong on the other side that maybe we're overestimating?
But if the science of demographics missed in 2005, Mr. Dent is not detoured. His outlook is more aggressive for the years 2005 through 2009. His prediction?
Everything we have says 2005 to 2009 is going to be perhaps the strongest bull market in history, at least rivaling 95, 99, and perhaps rivaling 1925 to 29. We've got one scenario that says the Dow hits 32,000. I think the most likely is 35 to 40,000, closer to 40,000.
He said 35,000 to 40,000 by 2009. Dan Solon, securities fraud attorney.
All of the academic studies that show conclusively to any fair-minded, objective person that nobody has the ability to tell you where the market is headed. Nobody has successfully predicted the long-term trend of the market.